Uh, Hi, good evening, everybody. Welcome everybody Yash
Recording in
Pack
progress.
for Yash Pakka 4Q FY21 post result investor call. I would like to welcome the management of Yash Pakka. We have Mr. Ved Krishna, Vice Chairman, Mr. Jagdeep Hira, Managing Director, Mr. Jignesh Shah, Chief Financial Officer, and Ms. Swati Agarwal, who shall be moderating the entire session. I would now like to hand over to Mr. Ved Krishna for his opening remarks, followed by Q&A. Over to you, sir.
Hi, very good evening, all of you. Thank you so much for joining us for this investor call. We do have a very short presentation, which we will run. And also, after that, the main idea in this call, like always, will be to take your questions, to answer your queries, to let you know what is happening in the organization and how we are taking things forward towards our vision overall and towards our goal of 2025. So that's the basic agenda, and that's what we'll be taking forward. Jignesh bhai, we can go to the next slide. So again, just to reiterate, of course, all of you are invested in the company, but just to know what we are doing. Next slide, please. So we are deeply committed to the idea of compostable packaging. And why do we do that is basically with the thought process of how do we leave the earth cleaner. And our methodology for that is to use compostable packaging. So that's the basic idea behind, that's the basic DNA of how the company functions. Next slide, please, Jignesh bhai. There is a whole growth path that has happened in the past. Of course, this is a slide with a lot of data, and of course, the presentation will be available to you later. We started as a very, very small organization producing about 5 tons of paper per day back in 1983 is when we started production. And slowly the organization has grown to the levels today, where we operate about 40,000 tons of paper. We also sell paper pulp in the market, and we are in the molded products domain, and going into a couple of other domains, which will be talked about in the next slide. We are also entering into more specialized grades, taking us closer to our vision. And I know Jagdeep will be talking more about the project that we are undertaking now. Next slide, please. So, of course, this is our huge, audacious goal for 2025. We've had our challenges, as have all of us, with the year that has passed in terms of COVID, but we are not changing any targets. We do plan to meet at least our bottom line targets that have been set for the year 2022. And taking cue from that, we will work towards ensuring that the goals for 2025 are met. So there are 3 broad areas which we are tackling and which we are involved in. The first, of course, is molded products. Molded products is again being hit significantly because of the restaurant business, food service business being shut. The second is utilizing, replacing bags in case of grocery bags in particular, and that is done through manufacturing excellent quality paper-based products or cellulose-based products. We've been doing a lot of research in this, and by next year, we are also transforming a lot of products in this domain. The third, of course, is something that we started working about 8 years back, and that is the flexible packaging domain, which is basically things like potato chip packaging and snack bags that we use every day when we buy processed food. So we are looking to transform that. We've done a lot of beta testing there, and the idea is also to come out with a commercial product in another year and a half in this domain with our new machine coming in. Next, please. Jignesh bhai, we can move to the next screen. So just a brief on this year before I hand over to my colleagues. COVID has been a challenge overall, and particularly for our company, as we were shut down for about 56 days completely. And of course, each time we shut down and we try and start up again, it takes a little time to stabilize. So it actually has a bigger impact. There is, of course, a direct impact when markets are shut in terms of business. There is you have to struggle for prices, you have to struggle for demand, and both those things have impacted the performance. But the great thing for us last year has been the whole aspect by which we've seen the resilience in the team, the way the team has functioned together. Of course, a lot of our own people went through their COVID struggles, but we ensured that everybody was together. And I think the company really pulled well together, which is a great sign for times to come. We have slowly returned towards normalcy, and Q3 and Q4 have been a little better. And of course, starting this year, we are back on track, and we are trying to work towards the targets that we have set up. Even though the domestic markets have still been very difficult, export sales are something that we are looking at, and the team has managed to create a great inroads in those directions. So that's the brief from me. I'll hand over to Jagdeep to take you through the performance, and then Jignesh bhai to talk about the financials.
Jignesh bhai.
Next slide, sir.
Yeah. So, namaskar to all. Having said that, what Ved emphasized on that last year was pretty challenging for everybody. Across industries, if we see, we would not say we have done on the very higher side, but we are comparatively much better in the place of positioning our top line and the bottom line and the production rate along with the order book value. Third quarter and fourth quarter we did quite well, and we see a upward trend last year in December, and then again from March onward it has gone down because of second wave coming in start of April. But having said that, we have been able to overcome all the challenges what has been faced by the industry and the converting industry particularly, because it's a chain process. And within that chain process, we have been able to, across industries, if we compare, we have been able to sustain our better form of performance and efficiencies level. So coming on to the finances, if you look onto the financial figures, we were almost 34% down on the top line. Having said that, but again, vis-a-vis other industries or competitors, we have been pretty well on the top line. If you see a molded products where we had hiccups last year, but again, we overcame on the production levels. Production levels are almost 30% higher than the last year, though even having a shut of almost 53 days net impact. And major challenge with 53 days of shut was a forced shut with government mandate and our team getting COVID positive. But the net impact on our biggest machine was 95 days. So having all those in concerns area, we could manage a better efficiencies on the molded product as well last year. Almost 10% efficiency increase was observed during the last year on molded products on this particular segment. And paper, again, if you talk of total EBITDA margins, we were at 25% EBITDA in last year, where we did around 22% of EBITDA last year. So these were the financial figures as just a summary. We are coming up heavily looking onto a vision what we set pre-COVID. So those challenges and the pre-COVID was not estimated or considered or thought of that time when we set our target, because target remains same as we've said, and we are coming up with a huge project. Just onto the project, if you see, we will be putting up a new paper machine, which will be a specialized niche products going on to food packaging, along with the flexible packaging. So we see our positioning on the top 10 across the globe in the production capability of those grades in the coming 1.5 years or so. We have great advantage of our raw material, Vegas best suited for molded fibers, and probably we will be the first company to have that integrated operations in line with the raw material, pulp, along with the flexible packaging and the molding. So that's the strength where Yash Pakka is coming in. And then we are also creating and exploring some avenues to generate wealth out of the waste. Whatever solid waste we generate, we are coming up with some innovative products to generate wealth out of that. So that's the gist of project we are coming in, and we hope to see within 1.5 years, we are onto the track with all the products in line with the vision. That was it from the business perspective. Jignesh bhai, up to you now. So these figures I already stated, and this will be presentation will be made available to everybody. So just I have just explained. Next, Jignesh bhai, and you can take over.
Yeah. So thank you very much, Jagdeep ji, and thank you very much, Viji. And we welcome all of you for this call. And it's really nice to see that all of so many people, so many investors have joined, and we really welcome this participation. Just to take it from what Viji said and what Jagdeep ji said, we have really remarkably done well in terms of this COVID period. Because if you see our sales as compared to, on a quarter-to-quarter basis as compared to previous years, you can see that first quarter, of course, because of the lockdown, we were, very, very behind the last year numbers. Q2, we slightly matched up. Q3, we were really very near. And Q4, if you see, we have almost done the number that was in the previous year. So that's the momentum that we have got, thanks to our entire operations team and the excellent management support, that we were able to achieve this momentum back after the COVID period. This is just a glimpse of our total financial journey. Right from 2016, we started with a 174 crore of turnover in FY16. We went to 261. Of course, this year is only 195 crore for the reasons that is well known to us. EBITDA was 2.58 crore. We went up to 61 crore. And then now this year, 43 crore. PBT was merely 4.4, then went up to 39.5 crore and now 22 crore. And PAT from 2.9 crore to 27.2 crore, and this year it is 1.7 crore, 16.9 crore. These are the financial results for the quarter and for the year ended. So for this quarter, we did a 58.86 crore turnover, sales and total turnover of 62.25 crore as compared to 58.09 in the previous quarter and 61.39 in the corresponding quarter of 2020. At an annual level, we did 194.97, which is almost 195 crore, as against a 261 crore in the previous year. Our profit before tax is 86.6 crore as compared for this quarter 8.66 crore as compared to 8.11 crore in the previous quarter. Total PAT 22.93 crore as compared to 39.53. profit and loss for the year. So net profit after tax impact is 6.71 as compared to 5.68, 16.72 for the entire year as compared to 27. On the segment side, we did a turnover was divided in between two parts, our paper business and the molded business, with a 54 crore of turnover for the paper and around 8 crore for the molded products. And for the entire year, we did 171 crore for the paper and 23.47 crore for the molded business. As explained by Jagdeep, on the molded side, there is definitely an improvement in terms of the efficiency, and that would bring the numbers, better numbers in the. Because if you can see, if the numbers are as good as the previous year, but this year, after the impact of this 56 days, almost 2 months of lockdown. On the profitability side, you can see that paper and pulp has done the majority, was 77.1 crore and 7.71 crore for this quarter, as against 1.19 crore in the molded segment. Total 21.87 crore and 2.15 crore in the molded products. And these are segment assets and liabilities. Just for the focus for the year 22, I think well explained by Jagdeep and Ved. But our focus is on 4 areas. First is, of course, the revised project that we are going to implement. The next is, of course, raising fund for the project. The momentum that we have got in Q1, we want to take it forward. And then we would definitely have better strategies for our tableware product to take it, to the next level. So with this, we conclude our presentations on the financial performance for Q4 and FY21. We are now ready to take questions. Swati would, request all of you to send your questions in a sequential manner. So one by one, we can take questions. Hand over to you, Swati.
Thank you, team, for sharing the Q4 updates. And as informed by Jignesh ji, now the forum is open for the Q&A. So I would request all of you to post your questions in the chat box. And then as I call out your name, so I would request you to unmute and then have interaction with our leadership. So please post your questions in the chat box. So we have a question from Mr. Yash M. I would request you to please unmute.
Hello.
Yes.
Hello. Good evening, all of you.
Good evening.
So this question is regarding the shares which has been pledged. Like
sorry, please go ahead. Sorry.
Yeah. So this question is regarding the number of pledged shares. So what's the way forward, sir? Any plans to reduce the pledge, and how we are going to, way forward, make sure that our debt reduction, is there any plan that we are going to make our company debt free?
So there are 2 questions which you've asked. The first is with the pledging of shares. So let me just clarify. We have done so in every investor call because this comes up. But all the shares that have been pledged are for the company. There is no other loan apart from for expansion of the company that has been taken up. What we have to see is the trajectory. We've grown from a very small 25 to 30 crore company to about 300 crores now. So bankers typically need collaterals, and the collateral that has been offered is by way of shares. That said, the company's financial performance is slowly gaining momentum and getting better. So the hope in the coming times is to be able to reduce the pledging of the shares if the bankers agree. The second question is to do with debt, and it is very much connected. So we are, like Jagdeep said, we are taking up another ambitious project, which will, of course, need both debt and equity. We will be raising some equity as well as some debt. So in order to keep the company growing, I don't think the debt equity ratio will be getting any better in the coming times. We will continue to invest towards the future and towards the vision that we have created and the targets that we've taken for 2025, which is to grow about 4 to 5x, which means that there will be a significant amount of debt and equity investments that will be coming in. So we will hopefully be able to see the bottom line going to the targets as well. But that said, we will hope to reduce the pledging of the shares, but the debt, of course, will not be something that will be reducing, but the profitability will be going up to sustain that.
Thank you, sir. Thank you much.
Thank you, Yash. Now I would request Mr. Felix Lobo to unmute. Mr. Felix Lobo.
Swati, you could also ask his questions in case they have trouble unmute.
All right. So the question is, when you have planned to release pledged shares? Again, I think you've already answered this.
Yeah.
So the next question is by Mr. Jeet Gala. Mr. Jeet Gala, I would request you to unmute, please.
Good evening, everyone. Can you hear me?
Yes,
Very well.
Yeah. So my first question is on the capex reconsideration, the word which is used in the PPT. So is it still a 240 crore capex, or is it being downsized? Or so one, I need a clarity on that. And number two, you've said that this capex now involves something towards flexible packaging. So if you can, and what I understand, this grease-proof paper is probably goes towards your paper segment. So what exactly gets covered under the flexible packaging?
Yeah, Mr. Vijit Galap, I would like to question this. This project is going to go upside. Why this has been changed? Because looking on to the next generation paper conversion, which is coming up in the flexible packaging. So the rest all will remain as a commodity paper segment, which was the initial thought process. If you look at greaseproof and glassine release-based paper, the potential growth by 2028 is around 6.2 CAGR. Having said that, if we further see the flexible packaging, which is a highly refined form of greaseproof paper, the CAGR would be above 10%. So this is coming up heavily for replacement of single-use plastic. I hope I answered the question.
Yeah. Okay. So my next question is on the capacity utilization for Chuck. So what I can understand is the tons that we have done in Q4 is somewhere around 345. So help me calculate, I mean, on the basis of the total capacity. So if I multiply 345 into, annualize it by, multiplying it by 4 and dividing it by, say, 330 days of operations or 320, I get a number of, say, 4.5 tons per day versus the capacity of 10 that we have. So is it true that we are operating still below 50%?
Yeah. So we are operating at around 48%, rightly said, which is higher by 10% than the previous year on the efficiency level. So this year plan is to boost another 20. We already have identified the concerns in the technology supplied by the machine manufacturer, and from next quarter onwards and thereon, we will take this graph by 20% net increase in the efficiency by end of the year. 22% of efficiency increase.
Okay.
So the team is already
but since you're so confident about doubling the capacity in Chuck, I mean, so is there any write-off which is going to happen to your existing capacity? I mean, for whatever reason, it just cannot go beyond 60%. I mean, is it of that sort? I mean, for example, if the molds have been of different shapes, not suitable for us.
No, I think Jeet, I will take that question.
Not exactly, Mr. Jeet Gala. So these all the modes are in the product profile. So probably those products probably which may not be in market as of now, we are developing a further leading solution for it, and hopefully we have done some trial at our end. Partially we got the success, and we see it moving by end of this year once the market opens up fully.
Right. So, okay. So my next question is on. I want to know
Mr.
the
G,
debt profile. I mean, yeah.
Mr. G, so because of the
Sure.
paucity of time, we would request to take 2 questions from each person. And then if you have
Sure,
further
sure.
questions,
All right.
you can put in the questions again. And if time permits, we'll take further questions. Thank you so much.
Sure. Thank you.
Thank you. I would request Mrs. Bandana to unmute, please. And her question is, what is the status on the merger?
So I'll take that question. On the merger side, what has happened is we got the approval from the stock exchanges and the SEBI, and the matter was with NCLT. NCLT heard the matter, and it was kept in abeyance because of the COVID second wave started. So in fact, we lost almost 2.5 months in that process because the courts were closed. We just got an intimation this this week that the courts has restarted, and we are expected to get an order within this week or maybe early next week. So once we get the order, then the next process starts where we'll have to do a shareholders meeting again and get that whole merger approved. And I think then this is more of a procedural. So on the approval side, I think we are very close. Just because of the NCLT the courts being closed down, the merger process got a bit delayed. I think almost 2.5 months. But I think things are now again moving, and we are trying to get it as fast as possible. Once we get the approval, we'll put it on the fast track for us.
Thank you. So the next question is again from Mr. Felix Lobo. I would request him to unmute.
Yes, ma'am.
Yeah.
You can hear me, ma'am?
Yes.
Yes.
Yes, Mr. Felix.
Yeah, the question is, I'm Felix Lobo from Bangalore. Last twice you give the dividend, now you are planning for third dividend, right?
Yeah.
I may be wrong.
Yes.
Correct, right?
Yes.
So instead of giving this a dividend, why can't you use this money for you are clearing your pledging shares? I'm not economist, but I am just thinking. We are not so curious. We are thinking of growing a company. So
I'll just take that question, Felix, just to move ahead. I wish the banks were so generous that, for like a total payout in dividend is about 3.5 crores. I don't think the banks will release the shares against the debt that we have taken for that amount. So it won't impact that much. What we have done in case of dividend is basically to have a more clear policy going forward. So what the board approved just last week, or one and a half weeks back, is 1 week back actually, is that we will have a clearer dividend policy, which is basically 20% of the net profits would go in as dividend. So depending on what the profitability is, and more or less this year's is also in line with that. So it ends up being about 10% dividend. But the basic idea that the board discussed was that let's have a very clear policy instead of having to discuss this every year. Should we give? Should we not give? So whatever the net profitability is, 20% of that will go into dividends as to us investors, including me. And that's the idea there, to have a standardized policy so that, when the operational team is also looking at reinvesting the funds, they know that 80% we can reduce some for CSR as well. But apart from that, say 75% is available for reinvestment and towards improving our debt equity ratios, etc., etc. But yeah, that's the standard policy now. And going forward, we will be doing 20% of net profit. So hopefully the net profits will grow, and so will the dividends in the coming times.
Thanks, Ved.
Thank you, Mr. Felix.
Yeah.
So now the next question is from Mr. YJ. I would request you to unmute, please.
Yeah. Hi. Thanks for the opportunity. Am I audible?
Yes.
Yeah. Hi. Yogansh this side. So couple of questions. So one is on the realization. So how has been the realization trend in Q4? Uh, and going forward, what do you see? Because of late, what we are seeing is because of pulp and paper price shooting up, there's some support. So can you just throw some light on how the end product in terms of craft and gloss paper and writing paper are behaving in the market at the moment? That's my first question.
Uh, on to the realization of paper. Last quarter has been pretty well. If we see vis-a-vis initially three quarters, there was a uptrend in the market across industries, writing, printing, specialty grades, and craft paper as well. So in between, craft paper was on the peak because of e-commerce happening. But again, having said that, there was a downtrend from April first week in a journal. Writing printing paper was pretty low because of all colleges, schools are closed down. Right now, the scenario is again the same. The availability of pulp is a concern because of freights going up and containers movement not happening much. Waste paper, if we see, again the availability because the collection centers are closed as of now across world, that's not happening. So having said that, we always have as an integrated pulp and paper mill and at Yash Pakka, we always have an added advantage of our own 5 years contract with the sugar mills for raw material. So we really don't get much heat of price increase in the international market of pulp. Hope I answered the first question.
I also wanted the realization value, if you could share that in terms of how much was it per ton and what's the current scenario like?
So current,
Average, just a ballpark.
we are not much focused because the market as of now has not opened up. So we are only able to collect a good order book so that our machine keeps running and our productivity keeps coming in. We have not seen any much increase in the pricing proposed and accepted by the customer and the end converters, but we are maintaining our focus on the order book first. Last year, there was an uptrend by almost 5 to 6% in the pricing vis-a-vis first 3 quarters.
So what I'm looking for is if you can share the per ton realization. So I think from the number that I could work out, I could see around 65,000 per ton of price. Is that calculation right on my end?
No, this is not right.
Right. So what is our average
So
realization?
average NSR though for the last year remains around 51 average on all the product mix.
Average is 51,000.
Yeah.
And
Got it.
and
Thank
what
you.
happens is it also depends upon the mix.
Because we produce almost 100 grades across our product profiles, as low as on the quality front with 18 BF, also as high as 35 BF. So you can see a wide range and almost double the paper quality on the paper side.
Got it. So my second question is a bookkeeping question. If you can share the breakup of your other income for what Q3 and Q4. I think it was 5 crore and 3 crore. So if you can share the breakup of that.
The breakup includes, so I'll take that question. So breakup includes majority in both the quarters was the EPCG write back. So EPCG index entries were there. So when you take a EPCG license against import of capital goods, you have to accrue those incomes for the future. And when you fulfill your export commitment, you have to realize. So in Q3, it was almost around 4.7 crore of income. And Q4, it is around 2.0. The rest of the incomes are coming from our regular interest income in the other part. But the majority income comes from the EPCG.
That's really helpful, sir. So just one last thing on that export incentive or the incentive that you just mentioned. So is the government payment regular these days, or do we see this money getting stuck somewhere?
So two things. The one that we are talking about, EPCG, is not the money that has been received now. The money was received in past by way of the differential in the custom duty. So when we imported the capital goods. Now we see a trend that because of the change in the policy, especially on the duty drawback and also on the MEIS scheme, the amount of realizations, the amount of approvals are slightly slower. But we are sure that these are all procedural matters, and I think by beginning of next quarter, when things becomes normal, I think the government will come out with a more faster approval process.
Got it. Thank you, sir. I'll get back in the queue. Thanks for answering all my questions.
Thank you.
Thank you. So the next question is from Dhruti. I would request you to unmute, please. So you have 3 questions. I would request you to take up 2 questions at max. Thank you.
Yeah, thanks, Swati. Actually, Dhruti is my wife's name, so I'm sorry for that. Apologize. My name is Hitin. I have 3 questions, but if you insist, I will restrict to 2 first, and then I'll queue back. First question is, we have this audacious, expansion program in place, and for which we are doing debt raising, a mix of debt and equity. I would like to know, can I have some more contours about what is going to be the debt and equity like? Have you worked out the ratio? Is it going to be a rights issue? Or are we all perhaps looking at issuing warrants to the promoters? In which case, perhaps the promoter holding can go up, and even the issue of percentage of the total holding as a percentage of pledge also can go down. Anything we worked on this?
Yeah, so basically the ratio will hover around the 25-75 sort of domain. 25 will be raised through equity and 75 through debt. The bankers have all been very buoyant about the expansion, and they have more or less said that as soon as we can come out with the final figures, which Jagdeep talked about, they will be ready to support it. The rest would be raised through certain QIPs. We will be issuing either warrants or some preferential shares. So that is still being worked out on how the equity is going to come in. So that's, I would say it's still in the works, Hitin. So let us work that out. But the idea will be to have about 25-75 kind of ratio.
Okay, thanks, Ved. The second question is about talent acquisition, because we have this, as you rightly said, audacious growth plan. And we do have a good top management in place. But what about middle management? How are we recruiting them? What are the thoughts around retaining that talent? Because we are based in Ayodhya, which is, slightly in the rural part of the country. How easy it is, or what has been the game plan around, acquiring talent and retaining them?
This question will take a full day, but anyway, so this is something we work on a lot. But thank you for the question, because it's a very pertinent question, and sometimes as investors we don't ask those sides, but that is actually what creates the difference. And I think one of our great focus and also achievements has been the domain of team building. The challenge is there. You have absolutely identified the locational issues. There is that challenge, but that said, we are investing a lot in infrastructure. Even this year, the idea is to have much better stay arrangements within the company. We already about 100 families stay within the compound, and we are expanding that further. That said, COVID has also taught us that we can work remotely. So like Jignesh Bhai and his team is now shifts time between Mumbai and Ayodhya. We have a team that sits out of Delhi, which is almost 15 people now, and that is growing. So of course, that's the marketing side of the organization, and some other aspects. Swati herself also is based out of Delhi. So, we all are learning to do this. And of course, we are starting a whole US operations where the whole innovation and value addition domain will slowly be moving. So, we are also learning that. But that said, there is a huge amount of focus on talent development internally as well. So we hire a decent amount from campus. and we work towards developing them, knowing that about 50% retention is going to be there. And Jagdeep has a huge plan for slowly building our own Yash skills domain, he calls it. And, the idea is to build our own training infrastructure further. And of course, it's an amazing energy within the organization. I would, in fact, request you at some point to visit it, and I'm sure Jignesh Bhai would be able to arrange that. And you'll feel the energy in the organization that is there. I think we're really proud of that overall. But yes, you pointed out well that those are challenges that we tackle regularly. Thank you for that.
Yeah, the challenge is because, the kind of goals that we have in mind, it's in a very short time frame. I think it's all about having the right people at the right place at the right time. But just with one more question, I heard that we have this US subsidy, and perhaps is there any plan of you to completely move out of India and get settled in US just to ensure that you take care of the subsidiary, or you'll be in India and you'll be taking care of it?
No, I'm sitting in US right now. So it will be a mix. We have a very good team in India now. And, like Jagdeep and Jignesh Bhai are here. And of course, there is a huge, wonderful team with them as well. So I have to also look at how we are going to grow in the future. It is going to be a mix. So for me, it's about 2/3, 1/3 now. I'm trying to spend, at least I'm looking to push myself to spend about 2/3 time in US, and then remaining 1/3 in India. So shuffling between the two, we have to look at both the future and the current state. So I think that is going to be more or less the trend in the next few years for me.
Thanks, Ved. And if Swati ma'am, you can permit me to ask one last question. I can see a smile on your face, but if you can say yes, then I go ahead with the third question.
Sure, please go ahead. It's just that I want maximum people to speak up, and because of the time.
I completely appreciate. Yes. And okay.
Sure, please
so the
go
third
ahead.
question is, now that we claim to have an integrated plant, right? Right from the including even manufacturing power by ourselves. Does it mean that we have the lowest cost advantage in the country, India, as well as globally? We have an cost advantage.
We are at the better position. We will not say that we are the lowest among all, because again, running altogether four operations in one operations, the cost is going to go up, and the volume scale is also not so great as of now. Once we are onto a volume scale, yes, we can say that we will be amongst the lowest onto the conversion cost and the raw material cost, along with the total conversion cost.
So would that volume? Yes, sorry, go ahead.
So then I'm going to just add to Jagdeep. So we are definitely not the lowest, but we are definitely the most stable. I think Jagdeep may agree with me on that, because the lowest will probably be dependent on, say, mostly the waste paper based producers, who would be, but depending on the, sometimes they could be really low and sometimes they could be really high. But for us, what is important through this is to remain very stable and be able to forecast.
But would it be fair to assume that post this particular expansion, which will get within a year, the economies of scale will kick in, and that will give us a huge cost advantage?
Surely, yes. Because across globe, if we see, Vegas has been a best suited fiber where we are coming in from, and where we want to go. So we are going to have a cost advantage on that aspect.
Thank you very much. And thank you, Swati ma'am, in particular.
Thank you. Thank you so much. So the next question is from Mr. Hiten. I would request you to unmute, please.
Hello. Am I audible?
Yes, Mr. Hiten, you're audible. Please go ahead and ask your question.
Yeah. Thanks for the opportunity, sir. So I have two questions. My first question is on the expansion side. So as we are expanding, I just wanted to know, our current capacity is around 48,000 tons, if I'm not wrong. So by what we are expanding by how much, and by when will this capacity will start? And one more clarification to add. So we are spending around 240 odd crores for this expansion, if I'm not wrong. So the breakup you gave of 25 for 75%, 25 for equity and 75 for debt, was this for was this for these 240 crores?
Jagdeep, should I answer? Do you want to answer the first bit?
So on the volume scale, we will be up by around 35-37% on total volume scale. But having said that, we are not restricting to that, because the end vision goal is 1.26 lakh tons on an annual basis. So that's the main goal or the main aim. We are adding up a 20% capacity on the molded products as well. So which will happen in late second quarter or start of third quarter. Those figures will be reflecting in the balance sheet as well and P&L as well from third quarter onwards.
Okay, so this expansion, sorry to interrupt, sir. So this expansion will be completed by next year, FY23, right?
Yeah.
Okay, by Q4 FY23.
Yeah, and your second question, yes, the debt equity that we talked about was for the expansion capacity money raise. It will be 25-75, depending on the quantum of money that we need for the expansion.
Okay. And so my second question is on the margin side, as the participant,
That's the third, Hitin, that's the third question, not the second question.
So sorry, sir. If may I continue with your permission?
I don't know, Swati, I don't know what you have lined up in terms of the number of questions.
So it's actually two questions, and I'm really sorry for this, because we want to take maximum number of questions.
No problem,
and
Swati ma'am, no problem. I'll get
Thank you.
Hitin, it may get answered anyways as the people ask.
Yes,
so your question
definitely. Thank you. Okay. So the next question is from Mr. Abhishek Sharma. I would please request you to unmute.
Hello, good evening. Good evening, everyone. And my question to management is what portion of our revenues we allocate towards research and development for 2021, and related to that question, where we are focusing, I mean, on more green forms or reductions in cost.
So our whole focus on the research and development or innovations, as we call it, it's difficult. Maybe Jignesh Bhai can pull out. Maybe it will be about at least. It's difficult for us to segregate. We should be segregating better. I think we'll pay more attention to this this year. But the whole innovation domain works in about 6 different segments, and we have clear teams for every segment, actually, because that is the lifeblood of what we are trying to do. And there's a lot of investment that goes in terms of partnerships, etc., that we build. And, like I said, part of the reason for us starting a US operations is also the innovations domain and the possibility of collaborations. The domains, I'll just quickly run you through the domains we look at. So from the back end, we do a lot of work on fiber research. So of course, we are based out of sugarcane bagasse. But the 2 of the components that we keep fixed as an organization is we will try to work with agricultural residues. That's the one fixed component. The second fixed component is that we will work on compostable packaging. So those 2 are relatively fixed. So the first team that we have does a lot of work around fiber. We look at how to work with different fibers. So we are looking at numerous fibers across the domain. And this is not just in India. We are looking at fibers across the globe. What is the future going to be? And of course, our focus remains sugarcane bagasse and how do we utilize it better. But we also work with Arundodomax, bamboo, hemp. Yesterday, I had a nice conversation with another team around hemp and various other fibers. We look at soy hull as well. Is something we have looked at recently. The second domain is on the pulping side, and how do we get the impact of pulping better. We reduce the impact and we use greener methods for pulping. The third is in the bag segment and how we look at improving the pulp and papers or cellulose-based products in the bag. And of course, as Jagdeep mentioned earlier, we would be upgrading the qualities that we are going to come out with even within this year. So next year, 2022-23, you will see an impact of that going forward. The fourth that Jagdeep again discussed was the flexible packaging domain, because we feel that's a huge possibility that we have to look at, and we do a lot of work around finding the right biopolymers, so to say, in order to work with pulp and paper. And of course, we are going ahead and setting up a very sophisticated machine now, which will also look at, apart from grease-proof grades, it will also look at flexible packaging possibilities to create barriers for moisture and air. So that's the fourth domain. The fifth domain is, of course, in the molded product side, where the focus has been a lot on how do we make the products stiffer, and also look at how do we improve the delivery solutions. So those are the two domains that we are looking at on the molded products. And the last is on the value-added segment. The value-added segment we call is, again, what Jagdeep mentioned, is creating value from waste that we have, or byproducts or co-products, we call it. So we work in three different domains there, looking at rice husk ash, and we are trying to create different silica-based products from that. There is, again, Jagdeep mentioned this, the calcium carbonate that we get as a co-product. We are looking at numerous value additions there, some very interesting. We are still not talking about it in the public domain, but interesting in improvements and innovations happening there. And of course, the third is the bagasse pith, which we have managed to now commercialize by making it better fuel through pelletization, but we are also looking at other possibilities. But so that's a pet subject for me. So sorry, I've taken a little longer than I should have. But yeah,
great insight, sir. Sir, one last question: who are our close competitors? I mean, in industry where we are.
So we are in various industries. So I would say for us, the moving forward, the close competition is a very difficult term for me in particular, and I think my team as well, because I actually am a very firm believer in collaboration. So we sell pulp to every molded product producer there is. Everybody you would consider a competitor. So we actually supply pulp to them, and we love doing that. There is no reason why we won't do that, because ultimately there is a huge market out there. So if you have to term it as competition, I would say non-compostables, the products that are in the market that are not going to go away, is something that we are deeply troubled by as a company, and that's what we do. So those are products we would say we would look towards finding other solution, but I would even say that, even saying that troubles me, because I know plastic itself is a wonderful product. It's the challenge is how we use it and how we are not able to dispose it. So I, again, maybe a little utopian, but I feel there is more possibilities of collaboration than competition. So that's the way we look at it.
Thank you. Thank you so much.
Thank you, Abhishek.
Best wishes to the management.
Thank you, Abhishek. So we have the last 3 minutes. So next question is from Mr. Gaurav, and he would like to know what would be Ved's focus in US subsidiary.
Oh, great.
Ved, sorry, this is Gaurav. If you could give extra time to this question, given you're spending 2/3 time in US now. So I think more from how you want to take it forward for the next 5 years. And will this remain 100% subsidiary of Yash Pakka, or do we dilute it there?
So the last bit is more difficult to say. For now, we've started with 100% subsidiary. The main focus is of innovation and collaboration. That's the main domain, because we have a huge vision in terms of really leaving the earth cleaner through compostable packaging. What we realize is that sitting in one corner of the world in Ayodhya, there is only that much we can do. And I think as a company, considering that, where we are based and, just to have that kind of thought process and vision has been a great blessing. And I think having the team to be able to start doing that is great. But I think it's very important to put ourselves out of our comfort zones. So that's my comfort zone. Ayodhya works really well for me. I live a really, comfortable life there. But since we are to take this whole vision forward of leaving the earth cleaner, we realize that we have to expose ourselves to a wider possibility. With that, we've taken this huge step of establishing the US entity, which we have now, starting to work towards possibilities of collaborations and innovations. So the way we are doing it is we've just started work on forming a platform called Global Compostables Alliance. So that is to bring the industry together and to find where are the innovations, where are the fundings that are what are the fundings that are happening, what is the new technology that is coming in. So those are the domains that the platform will look at. Based on the platform, we are also going to look at the possibilities of, again, like I said, collaborations, investments, and joint innovations. So that's the broad framework. And of course, me being here excites Jagdeep, and he has constantly been saying that we have to do a lot of business development in US. So that is something that we will also do going forward. We feel that especially our molded products have a huge possibility in the Western market. We will just now we are trying to stabilize the Indian operations and Indian markets with all the COVID issues. We were hoping we would do it last year, but that's okay. We'll definitely do more this year. But that said, the potential is huge across the world, and we will look at brand launches this side as well. So a mix of things, mainly centered around the ideas of collaboration and innovations.
Would you also be doing helping Yash Pakka raise funds at an attractive price out of US, say dilute equity at a good price, I would say? Is that a focus as well, sitting out of US, given the ESG focus is quite high there with the institutions?
Yeah, opportunities have definitely started coming. We have to still expose ourselves more. But yes, we do talk to a lot more people now that we have this exposure. So I would not put it out of the running for this expansion, but yes, going forward, there may be, possibilities of more funding through lower price possibilities.
Cool. Thank you so much, and all the best, everyone. Thank you.
Thank you.
Thank you, Gaurav. So thank you, everyone. We have to end the call now because we had a hard stop at 7:30. But really, thank you so much for joining the call and giving this opportunity to interact with all of you. And thanks a lot. And we'll continue.
Swati, can we just do this? If you can just compile, before we cut off, if you can check the chat box. And if we have not answered any questions, if you can just compile them, and then Jignesh Bhai can get them answered and send it to that particular person so that the questions are not left in the end. So, we can send an email separately.
Sure, I'll do that. I'll compile.
Kishore just said that he's been waiting. So yeah, we can just compile it.
There are many questions that are still left. I can see around 23 questions. So I will compile all of them and send it to Jignesh ji, and for sure
I can also type in my ID here, ID.
I would say let's Swati coordinate Jignesh Bhai. It'll be easier if one person is coordinating. So I would say that I think you can answer most of it, and then we can step in wherever you need us. Okay, thank you, Swati. Please.
Yes. So thank you. And as suggested, all of you, and we are really sorry for some of the questions that we were not able to take up, but definitely you will get the answers to that also. And with that, we will continue our endeavor to be really transparent as a company and share the information with all of you as we want to really grow this community. Thank you so much for coming on this call.
Thank you very much.
Thank you.
Thank you.